After all, if people don't trust banks, the less money is borrowed. If people don't buy real estate, developers walk away from projects. This then repeats the cycle to an even larger degree.
If people don't trust banks. Well, if you're watching this video, probability is you might be one of those people. I know I am. What the heck is happening with China's economy? Is there a major real estate crash impending that's about to take the whole country under? Who knows? But we're going to react to a cool video that's talking about it.
Tens of thousands of them have begun withholding payments for unfinished projects.
A massive protest over frozen bank deposits.
The international community and the financial markets will also feel the pain.
Okay, so already there's a lot going on here. So they're talking about the real estate market and the deposits and everything being less there, but also the part about frozen bank accounts. So there is many news articles about this. You can absolutely Google a lot of these things. Although, from what I understand, it has been harder to hear about them. I think it's reasonable to assume that there is a bit of, let's say, data coming out of a communist nation that seem to want to maybe hold off on some of that information exiting the country. So I believe that there's although there is absolutely news articles you can find, maybe we're not able to find out the full story. So, and I'm sure even with the video that we're about to dig into here, I haven't validated any of this data. I haven't even watched this video before. So, do your own research. But I do believe, from what I understand in the description and what I heard about this video, is that there is a lot of telltale signs here of an impending bubble. And there's a lot of historic aspects of that follow a similar track of how bubbles like this are created. So I think that's kind of the key takeaway. So let's see what the economic collapse of China is all about.
What's up, you guys? It's Graham here. So I recently came across an extremely unsettling video from Cascades Academy, who posted about how China's entire economy will collapse in 34 days. And yeah, I have to say, I had no idea what I was about to get myself into. Even though we've covered some of the fallout back in September with the collapse of the largest property developer, Evergrande, I was completely...
So talk about Evergrande in a second, but he's saying 34 days from now. So I mean, that seems like a pretty bold statement. And this video, I believe, was recorded or not recorded, I don't know recording, but I believe it was released in early August of 2022. So I'm watching this probably a couple weeks later, like maybe about 10 days or 2 weeks after it was released. It's August 20th today. So he's saying 34 days. We're already like 2 weeks into those 34 days. And we don't know when it was recorded versus when it was released. So just making some observation about that. But he mentions Evergrande. So yeah, the real estate developer Evergrande, I mean, they might be one of the largest real estate developers ever, period, known, so over a very long time frame. And absolutely there's a collapse, and that one thing right there, I suspect we're going to learn more about it, is probably a big component of what's driving this, because they were such a large real estate developer, and there's all kinds of buildings that are basically empty that they've been constructed, but there's nobody living in them. They've been talking about ghost towns or ghost cities in China for a number of years. And I think some of that even has to do with going back to the Olympics that were held a few years back, where there was a huge amount of build construction, but they literally were building cities, and people are like investing to live in places or to buy places to get advantage of this real estate market. But they're just ghost towns. It's like tumbleweeds running through and concrete and buildings, but there's nobody living in them. There's like malls. Like I've seen videos already years ago now of people walking through these communities where there's just nobody there. There's like a mall and there's no stores open. It's a brand new mall, but it's already like starting to deteriorate because it isn't being utilized. So there is absolutely evidence of this type of thing happening already prior to this video ever coming out.
Completely unaware of the sheer magnitude of just how much the situation has devolved, and how this could quite literally lead China to the edge of the next Great Depression in a very short amount of time. Why does this matter? Well, China is one of the largest economies in the world. They're fighting to overtake the US dollar as the world's reserve currency. They're responsible for manufacturing 20% of the items that we use day to day, and they are, without exaggeration, at risk of a complete financial collapse, which of course would affect the rest of the world. So as inspired by Cascades Academy, who I'll link to down below in the description, I did my own research to determine just how bad the situation really was. And
I love that graphic. There's a guy on YouTube. That's really good. Whoever did the video editing, this is fantastic. So coincidentally, I'm just a guy on YouTube. So my research was I've watched some random videos in the past, and now I'm watching this also random video which showed up for me, which I've never seen before. So again, take everything with a grain of salt here. I'm just some dude making commentary on YouTube, but I do think so far it's an interesting video, and I'm excited to see what he has done for research and where it goes from here.
What you're about to hear is most likely going to be worse than expected. See, much of this begins with two words: real estate. Throughout the last few years, China experienced what many would consider to be a real estate bubble, as citizens preferred to invest their money in real estate as a safety net, causing the real estate market to increase double digits year over year. On top of that, the urbanization throughout most of rural China, combined with the societal pressure to own a home, caused a massive relocation to cities that offered greater opportunities and higher earnings potential, thereby further driving up demand. In fact, the country was building 5 times as many homes as America and Europe combined, and supply was still so limited.
Now, I can't validate that, but obviously we're pulling some headlines. But I mean, there's obviously just logic to what's happening here. I think everyone knows that there's been a huge urbanization happening in China. It's the rise of the middle class and that sort of thing. People moving from the outer rural communities into the major cities, and those cities, blowing up, and the need and demand for housing as that happens, and manufacturing jobs increasing. Like, all these things are, this isn't like an overnight thing. This has been happening for decades, but there's been an increase in that activity happening, and so if we just stopped at that alone and we didn't even think about any other economics about interest rates and all the other kind of manipulation of the money supply that's been happening globally, and we just looked at the fundamentals of like the urbanization of a large nation which has a massive population base of people moving from this farming kind of world to this like smashing everybody into cities, we can start to see the possibility already building up towards a housing bubble over a long period of time. And now we start throwing in some economic factors, which I'm sure he's about to get to here. And, you can clearly identify like, well, this seems pretty sensible that this could happen, seeing as how, even just with what we've looked at so far, this same similarities and trends have caused housing bubbles in many other locations over a historic amount of time. So, I mean, it's not like we have to stretch very far to think that we could be getting into some kind of a problem.
Admitted that some cities would use a lottery system to decide who gets to buy a home, with some odds as low as 1 in 60. That led to 70% of the country's wealth being tied to the property market, which is more than twice as high as we have here in the United States. But there was...
Now, again, we're looking at headlines, and they're coming by quickly, so we don't really have a way to validate them. But I mean, if it's a headline, it's probably from a reasonable article. It's just a matter of what the source is. But I mean, I don't think that there's any reason to doubt the reasonability of what he's saying here, because when there's a housing demand in an area and it's hard to get anything because they can't keep up with the demand, the supply is insufficient. It's simply a supply and demand situation. And everyone's wanting to get into the market in these given areas, but there's nothing available for them. Obviously, that's going to push up prices. That's what happens. It happened, in Edmonton, Alberta, in 2004, 5, 6, and 7 before it, kind of hit a peak and then it crashed. And so I lived through that experience, and I've also, done enough reading of history books and economic books that you can easily circle back to many other experiences throughout time where this same situation has taken place.
There's also another problem. People believed the housing market was such a good investment that they would literally buy anything that they could get, because even if they didn't live there and they kept it empty, they could always sell it in the future for a profit. At that point, property values were rising so quickly that developers would pre-sell units where the buyer would begin
I love his use of air quotations. Being an air quote guy myself. So, I mean, this speculative investing method it happens all the time. It's happening in Canada. I mean, it's probably going to taper right now because we're seeing interest rates begin to rise. And so now there's articles coming out saying, oh my God, the Canadian real estate market's going to collapse. I'm like, okay, well, what about all the 10 years of articles leading up to how there was certain bits of unsustainability in what we were creating because of the low interest rate environment? So, in areas like Vancouver and Toronto and the GTA area, we've seen monstrous house spikes, no different than what they're talking about here. I mean, maybe the numbers are different, but And geographically, there's always going to be certain pockets at this town or this community or this general sector. When you look at a greater nation and you isolate certain areas where there's outlier events that are happening, the Toronto marketplace has been one of those over the last, maybe not quite decade, but pretty close to a decade. And there are some things that were driving that up, but a lot of that driver has been funny money. So the manipulation of the interest rates and that sort of thing by the Bank of Canada, and that causing a spur and a frenzy. And so all these, there's other factors, but these are ancillary factors that go towards driving people to buy property and having the price rise because the affordability on the payment, it gets easier and easier to afford a higher value property based on a lower interest rate. And so we've seen this huge increase. And then exactly what we're talking about here, like pre-construction, condos and properties where people are buying and they're getting it on the ground floor, get on the deal before the deal's gone. And they hear about their neighbor, Bob and Sally, they made $100,000 on a pre-sale condo. Like that's obviously the way to get yourself to wealth. Well, that works out for a bunch of people until it just doesn't. Sooner or later, you're late to the party. Someone's always late to the party. You go inside the deal for the pre-construction condo. You put in your deposit of 25 or 50 grand. And then 5 years goes by and you're supposed to be taking possession of this thing and it's supposed to be worth this huge lift. Your intention wasn't even to own it. It was literally to flip it or to sell the contract or to sell the unit as soon as you take possession. And so you close on the property and now you're trying to sell it and there's no more buyers. The market has shifted. And that rise of value that everyone else was getting, you didn't get it. Maybe you own a property that's worth less than what you signed the contract for. Or maybe it's worth the same value, but you can't sell it because now you got to pay, real estate fees, you got to pay the mortgage, payout penalty and ancillary costs. And you're in a position now that you can't exit the deal and get your capital back out. Now, depending on where you live or how old you are when you're watching this, maybe you haven't experienced that yet. But I can tell you personally of people that I know who've experienced, and I myself has experienced, ups and downs of real estate markets in a variety of different markets. And I have colleagues all over North America that can tell you all kinds of stories about this. So it's no different than, getting a hot stock tip from your buddy. And then of course, by the time, you get the stock tip and you go and acquire the stock, you're buying it at a higher price and eventually the price falls and now you're left holding the bag. It's, PJ O'Rourke wrote a book called, I believe it was him, he wrote a book called The Greater Fool Theory. And, it's, hey, you're just trying to find a greater fool to buy it from you at a higher price. And then he's trying to find a greater fool to buy it from him at a higher price and so on until we find the greatest fool of all who pays the highest price. And then it comes plummeting down. We can see that happen sometimes quicker and faster in a stock market situation because of the nature of speed of buying and selling. It happens usually over longer time horizons in the real estate market because, it's not as quick and easy to just buy a piece of real estate. There's a bunch of paperwork that's got to happen. And you might have to go walk through a couple houses and stuff. So it does take longer to see that cycle appear. And, we're obviously at the tail end of a pretty good cycle. And so far what I'm seeing, again, not validating any of these because I couldn't possibly do that, but we're just looking at headlines. Normally usually the good stuff of an article is at the bottom of the article, not at the top of the article. I learned that from one of my mentors, Don Campbell, who used to do a great session called What's Behind the Curtain as part of the Real Estate Investment Network. And, I learned a ton from him about how to look at these articles with a little bit more of a keen eye. And unfortunately, we're not able to do that here. But again, just using a little bit of logic, there's nothing that I see here that doesn't give me indication to think that, that this, gentleman is saying is completely off base.
Making payments on a property that didn't even exist yet, with the expectation that it would be cheaper to buy today than it would be in the future since property values just keep on rising higher. It didn't matter how much it cost either. Home buyers would spend as much as 23 times their annual income to buy a home, with the mortgage sometimes taking up more than half of their gross take-home pay while they financed and borrowed money from.
We've never seen that happen before. That wasn't part of the same kind of situation that happened during the subprime crisis that led to an ultimate collapse of the real estate market, and then mortgage-backed securities being bundled up over a bunch of years and sold as investment-grade products all across the globe, which brought down most of the financial system in 2008. No. We've never seen anything like this before. Of course not. There's no possible way that could happen. No one would be stupid enough to do that. Oh, wait a second. It's already happened before in the past. Keep forgetting about that thing called history. Jeez, if only there was some way to learn from that experience.
Family and friends just to say that they're able to own a home. That led to a 22% vacancy rate throughout China as homebuyers bought second properties for an investment just outside the city limits without restrictions, right as the government...
This is, I think, where the ghost cities start coming into place when you get a vacancy rate like that. It's pretty crazy. If you actually experience a vacancy rate like that, you know, and you're holding on to property that you can't really afford, that's a recipe for disaster. But if you can't even rent it, there's no rental market, there's nobody living there to pay any form of the costs, it could be very debilitating in a quick period of time. And like thinking about vacancy rates, you know, I've seen vacancy rates this high in the town of Fort McMurray in Alberta because, you know, they've kind of been through the ringer in the last decade or so with the oil price being, you know, very cyclical, some other economic factors in the province of Alberta, as well as, you know, they had a major fire event that they had to evacuate the entire city. You know, that happened for a long period of time, had a devastating impact on the city. Also coincidentally caused a huge spike in a cockroach problem in the city because it was in the peak heat of the summer and everybody, like, power was out, like fridges, food left on the counter, that sort of thing is not good for infestation. But, you know, additionally, they also had a major flood event, you know, again, shortly after that, a couple of years later. So, I mean, they've been like beaten up severely, both by the economy and then other ancillary factors. So vacancy rates have been very high. They're still very high in that community today. And I mean, easily they were at 25% for a number of years. And they're probably starting to decline now, but not substantially. And it's, depending on where you are, if you're in the downtown core, still a pretty high vacancy rate there today as of 2022.
Government stepped in to buy the surplus inventory to keep the market stable. In addition to that, the increased building demand meant that there was less oversight in terms of quality of construction, leading, of course, to substantial building problems as developers cut corners to save costs and
There's a lot of good stuff in this video. So again, I'm just like providing a reference point. So I was a licensed realtor in Edmonton, Alberta for not quite a decade, but like about 9 years. And I have a construction background. I'm a journeyman electrician, actually, by trade. You know, my former life. I guess it's never really former. It's still part of your life. And so I have a degree of understanding of construction, residential and commercial and industrial construction. And there was so many problems with condominium property like this, exactly what's being described here. And, you know, quote unquote, shoddy workmanship, or maybe a little bit of a lack on meeting the proper regulations. And of course, you know, I would imagine in certain marketplaces, there's times where the wheels of the machine get greased a little bit. You know, there's a little bit of money that changes hands for inspectors and people to look the other way. Whether, you know, like, we can't validate that happening here, but like, it's reasonable to jump to the conclusion like, oh yeah, you know, we're making so much money, let's just grease the wheels of the machine a little bit so we can get our building inspected and get a stamp so we can have occupancy.
The problem is that these pre-sale units were not being finished. In fact, it's alleged that some of the largest property developers were taking pre-sale money, funneling them as down payments into new projects for the purpose of garnering even more pre-sale deposits and running a property Ponzi scheme by using...
Yeah, I was about to say, that's called a Ponzi scheme, but he's already done it here. And I'll try to let this video play through, but similar to this, like, there was some stuff that happened even recently in Saskatchewan, I believe in Saskatoon, with a major real estate company that's gone belly up and a huge amount of investors taken under. So again, in Canada recently, I believe it was their Epic Real Estate was the name of the company. So there's several articles about that. This is all coming to fruition in the last several months. And it wasn't new construction. It was all pre-existing homes and like a landlord flipping kind of arrangement, but that's what was happening. Part of it is they were using money and they were using it to pay out rent to people. They guarantee these rents, but then they're also trying to acquire more property. So it was like a pass the buck forward situation that just all imploded. And so that's what happens in these situations. I mean, yeah, there's nothing here that has never happened before. It's just happening to what it sounds like a much larger scale in the country of China.
this is only the tip of the iceberg. As more and more projects have fallen behind in construction or flat out abandoned their construction entirely due to a lack of funding, buyers have staged a mortgage boycott where all homeowners with outstanding mortgage loans will stop paying unless construction resumes before October 20th. Even though this all started with the property giant Evergrande, who's $300 billion in debt, within 4 weeks, more than 320 projects in about 100 cities were facing similar protests, roiling markets and forcing authorities to corral banks and developers.
I think this is interesting. They're saying 320 projects in 100 cities. I mean, that's a lot of cities, of course. But 320 projects, what we don't know is how many units per project. Like if we're talking, say 300 unit condo buildings or apartment towers, then that's a massive amount of individual units. And on top of a whole bunch of already basically completed units that are vacant because of the buying spree prior to this. I mean, we're looking at a monstrous amount of property right here. That's not going to go well.
Developers to diffuse the unrest, although the damage might be too late to fix. Home sales and property investments have seen a steep decline since February of 2021, while at the same time, the credit market ballooned at a staggering rate.
The credit market ballooned. China's bank loans to the property sector ballooned over the years. Yeah. I mean, it's a huge increase. And we're looking at less than a 10-year period of time. So this is about an 8-year market cycle. And again, driven a lot by interest rates and all these kind of things. It's a big problem. Wouldn't matter where this graph is located, which country we're talking about. But it's a problem.
Well, China came out with a statement that they've tightened regulation by supervising customer funds and ensuring timely delivery of new units. But when 96% of the Chinese population is exposed to the real estate market and 13 million units have already been halted in the last year alone, it's inevitably going to spill over across other industries, and banks are one of them. On July 11th, protests erupted outside of the People's Bank of China, where customer deposits have been frozen since April when banking regulators said that they were investigating out.
So just stop right there and think about that for a second. So you got money deposit on a bank and it's frozen. You can't go get your money. And it happened in April. So April, May, June, July, or June and July now, you're starting to protest because you need your money. You can't pay your bills. You can't pay your mortgage. You can't get the down payment you need to go close on that reconstruction condo that you signed paperwork on 5 years ago. That's not even going to be finished. You're going to take possession of an empty shell that won't even have, it won't be up to par. And you can't even get the money out to do it because the bank has frozen the funds of the money. The reason is because it's not your money. It's an IOU. If you got that money on deposit at the bank, and they'll say the Bank of China or whatever they said it was here, it's not yours. As soon as you hand the money over to them or it's direct deposited into that account, you have an account, you have a ledger, but you've transferred ownership of the money away to the lending institution. They have an IOU that says on demand, you get this deposit back, but on demand if we have the money. Well, if they don't have the money to give your deposit back, then that's called a run on the bank. So basically what we're looking at here based on this part of the video is a run on the bank starting in April. People are looking for the deposits and the bank doesn't have the deposits to give them. Yeah. Again, not good, not a good situation. Having more control over your capital, ideally in a private contract, where a dollar is not manipulated from the central banking system, probably a better situation overall. You can learn more about that, by the way, if you want to go to watchibc.com and you can kind of learn how to make that happen for yourself.
Allegations of illegal financial activity. Now, the authorities claim that the problem was caused by a takeover of the bank by criminal gangs, which they say dated back to 2011, was met with a lot of skepticism.
I was going to say, let me guess, so that's the government? Who's the criminal gang they're talking about here? More of the banking system, or is it the government, or is it actually some other form of criminal institution? Anyway, just I thought that was funny.
And according to an inside source, some developers have been taking the money needed to finish housing projects out of the country. For example, they might take out a loan for $80 million, spend $10 million buying a new property to collect even more pre-sale deposits, and then transfer the money overseas, leaving the bank and the people on the hook for the amount unpaid.
Boy, I can't imagine any of that money going overseas, landing in, I don't know, causing a similar increase in housing prices that's now impacting an entirely different nation. I mean, can't imagine that happening at all. Interesting.
The Chinese government has agreed to repay their customers the equivalent of about $15,000, but that might not be enough to get their customers to fully trust the banking system again, leading to the word that everyone fears, a bank run. As Cascades Academy pointed out, both the US and China employ a system called fractional reserve banking, where a bank is only required.
Well, there we go. In this video that he's got here, 1minuteeconomics.com. That's a great site that has a lot of really interesting animated videos as well, which I've watched a few before. They're kind of neat.
To keep 10% of their customers' assets on hand at all times. The rest could be freely lent out or loaned to other institutions for a profit. Just imagine it like this. You give me $1,000 to hold on to for safekeeping, but I'm allowed to turn around to give $900 of that to someone else who gives $810 to someone else who gives $709 to someone else, and so on. Or in other words, they're betting that no more than 10% of their customers are going to want all of their money back at the exact same time. But since 2019, China's been lowering these reserve requirements to allow for more money to be spent, which would temporarily prevent the economy from slowing down. But that comes at the increased risk of a bank run should more of their customers all demand their money back at the exact same time.
Which tends to happen in escalating numbers when news articles are going out and videos, especially on social media, that are showing people protesting, hey, I haven't been able to access my money since April. I'd really like to get my money so I can put food on my table and feed my family and stuff. You know, that word gets around pretty quickly, and then this like escalates fast. It's like, oh my God, everybody goes and starts to. It's kind of like when COVID first started, ramping up, and the lockdowns beginning in different areas, like in Canada. The biggest thing in the news was about toilet paper. Oh my God, we can't get toilet paper. The toilet paper's off the shelves. Like, for some reason, everybody thought that of all the things that they could have needed, like canned goods and food for their family, like toilet paper was the number one thing. And so, like, basically the supply chain, there was no toilet paper to get in any stores, and it was just cleared out. And it was like kind of like a stampede. The doors would open in a grocery store, and there was a stampede of people running to try and go to the toilet paper aisle because there's no toilet paper available. So the same concept of that happening, which did happen during COVID, is now happening or will likely take place in this bank run situation. Everyone, as soon as you can't go and get the thing that you need or you should be able to go get, the panic buying begins. In this case, it's not panic buying, it's panic withdrawals to try to make sure that you're not the last one who can't get any of their money out of that institution. Again, this is not new. This has happened before.
This happening at the same time that their population has lost faith in the real estate market, has degraded consumer faith in the Chinese economy. And for the government, the priority is to break the negative feedback loop that features the high leverage ratio and the liquidity crunch on the part of the developers. After all, if people don't trust banks, the less money is borrowed. If people don't buy real estate, developers walk away from projects. This then repeats the cycle to an even larger degree.
If people don't trust banks, well, if you're watching this video, probability is you might be one of those people. I know I am. And it's not that the people who work at the bank are bad. It's that the fundamental methodology by which the commercial banking system is allowed to implement this fractional reserve mechanism is part of the problem. And the way to become a solution to that problem is to stop doing your business with banks. So you might want to consider how you can become your own bank. Pretty simple. Go to watchibc.com. You can learn all about that. But the more and more people on a global scale that are able to implement that process in their life, and it's nothing that happens overnight, but as you start to take your deposit business away from a commercial banking system, they can't manufacture new money off of your deposit anymore. They can't fractionalize it. And if you take your lending business, where you need to borrow capital from a fractional reserve institution, a commercial bank that allows for that manipulation of the monetary supply away from them, and you do that in an institution, let's say a mutual insurance company where you co-own it and you participate in all their profits, including their lending business, and you basically co-own the lender. And you do that where you can now, they're not allowed to fractionalize the money supply because they're not a banking institution. Then now you're becoming part of the solution versus part of the problem. And that's what Nelson Nash, my mentor, recognized, and that this method of becoming your own banker and implementing the infinite banking concept, as you can kind of see up in my sign here, becoming your own banker, is a method of combating the fractional reserve system without needing to seek government action or lobby or political means which Nelson would have referred to as top-down thinking. Instead, it's a way to create a societal bottom-up solution to a top-down problem. And we don't need to ask permission. You just get started. So anyway, watch IBC.com. You learn all about it.
Will people pull money out of the system and protect whatever is left? However, the one thing that China's been really good at is delaying the inevitable through reimbursing some accounts, saying they'll oversee transactions, and potentially bailing out bankrupt developers by lending even more money. Yeah, seriously, you can't even make this up.
Not only can you not make it up, it's happened before, not that long ago. Remember 2008 crisis meltdown, bailouts like Citibank, and this is no different. This is the same stuff. It's legitimate, and all the people would say, "Boy, we learned our lesson. This will never happen again." Well, obviously not. Like, it's happening right here. So I don't know. This is just like the 2008 financial crisis. Is effectively, when we think about the subprime mortgage crisis, there was a whole bunch of empty houses. People were buying property. The real estate markets were going up. They were getting loans without qualifying. It was easy to get easy credit, easy to get money, buying things. Everyone thought that the house prices were going to go up. Appraisers were getting the greasy, getting their pockets greased. Mortgage people, again, not that these are bad people, but they're getting like kickbacks and all this kind of stuff. So they're letting the loans go. Like, it's just the whole thing was shenanigans taking place again over a number of years. And just spreading and spreading.
Solution to solve over-leveraged properties is to simply loan more money to make up for it. It's kind of like telling a lottery addict to go and buy more lottery tickets to recoup their losses. But it's estimated that this new fund could raise all the way up to 300 billion yuan, which might...
This is the quantitative easing, basically QE stuff that's been happening in the States. The same. They put a fancy label on it. It's the same stuff. It reminds me of some of the videos that used to be out there. They're probably still out there on YouTube of when they were talking about Ben Bernanke, who at that time during subprime was the chairman of the Federal Reserve, and they were calling him Helicopter Ben because there was like these whatever animated videos of his head coming out of a helicopter and just like money raining down out of the helicopter because the Fed's printing money. It's all the same crap that's happening right here.
But regardless, Chinese companies also hold a lot of exposure to the United States market. And when they need money, it would make sense that they would sell those assets to raise capital, which would result in a much more volatile stock market. The real impact, though, for everyone in the US is not so much a policy change or a drop in the stock market, but instead the investor perception that things could get a lot worse before they get better. Or in other words, it's just fear. In the United States, for example, fractional reserve banking has been around since 1791, and it's backed by the code of the FDIC and regulation to ensure that banks aren't just going to be running off with their money. Now, sure, you have examples of the 1920s Great Depression caused by over-leverage on bad investments while entire cities wanted their money back. But throughout most of...
Another example, which was mentioned here, is the First National Bank of Midland, Texas. Now, in Nelson Nash's book, he talks about that, the collapse of the First National Bank of Midland, Texas is a great example. And again, it's the shareholders of the bank who were taking loans, and they were non-performing loans. They were reinvesting them into the oil business because they were greedy and they wanted to make money in the oil business. So there's lots of circumstances of this type of activity happening. And he's mentioning the FDIC, which is a Federal Deposit Insurance Corporation in the States. So in Canada, we have the CDIC, Canada Deposit Insurance Corporation. Now, according to the research I've done, the funding of the Canada Deposit Insurance Corporation is certainly much higher in proportionate scale, like population base wise, to the FDIC in the US. So we're probably better off in Canada. I think for the most part, we're more conservative in how we do a lot of things here in Canada, but it's still likely insufficient. It only guarantees or insures up to $100,000 Canadian per account, account type per institution.
But it's noted that China will fall short of meeting its annual economic growth target of 5.5%, and we're starting to realize very quickly that the days of China's meteoric economic rise are long past. In a perfect world, I would love to see this amicably resolved and tougher regulations in place to protect their citizens. But realistically, expect that the Chinese economy is going to be something to closely follow. And if you want to be kept up to date, feel free to subscribe or check out Cascaine's Academy down below in the description, because he provided some great insights into the inner workings of their economy.
Just thinking about make the assumption, if everything that he's saying is true, if all these headlines are accurate, if the articles written are all accurate, then yeah, absolutely, there's a big fat problem that's been created. But just think in general broad terms about the circumstances. So let's forget about China and forget about it being their economy, and just think about the circumstances of this happening anywhere. What would naturally tend to happen? We had, panic buying because we can't get into a house, and everyone's, like this greed factor. We're buying property, and then it's easy credit, easy money. You got a bunch of property that's being built, and now it's not being built maybe to the proper codes and then developers are taking money, and the money, rather than being available to make sure they finish their project, is actually going to start another project so they can sell more. Like, these types of things happening could create a pretty epic problem. And I do believe there's a lot of ways you could validate many of these aspects, and I don't think it would take you very long to go and validate them. And I'm not here to do that. That's not my role. My role is just to talk through what we're watching and give you perspective. Could this be a problem? How big could the problem be? And what would it mean for you? Well, I think one of the things it would mean for you is that you probably want to recognize where you have your money stored and where is your money protected, and how much exposure do you have to things like, let's say, the national economy of China. Now, if you have, ABC mutual funds or whatever with some bank or some whatever group benefit plan, let's just say, take a look at what your holdings are and how much of that is exposed directly to marketplaces like this. I mean, you're the only one that can go take a look at it. No one else is going to look at it for you. That's up to you to do. And you might look at rebalancing some stuff and might say, oh, geez, looks like there could be some murky waters up ahead. Maybe I want to move some of my capital into a place where it's preserved, and I can make sure it's going to be there regardless of these market conditions happening, and start, getting yourself some private contracts. Well, free contract with other free people is the basis of which mutual whole life insurance is designed. And it is a free contract that you enter into voluntarily. Nobody puts a gun to your head and forces you to do it. And you could be personally profitable with your own personal monetary system. So there's no reason not to do it. It's just a matter of understanding how does it work, and is it something you want to do? Well, first step to that is going to watchibc.com and take a few minutes to learn and see if it's the right fit for you. Maybe it isn't, but the only way you're going to know is if you start doing some research. So hope you enjoyed this reaction, and stay tuned for some more coming up. Check out the next video on the list.